looked at some numbers more recently. I believe that we peaked out with like 150,000 unique licensed individuals
Okay.
in the country, and I think we are down to about 90,000. But that was 2 months ago. I expect even further
Further
fallout.
down, yeah.
But I know that nationally, I believe volume is down over 70%, and my business has fallen in line with that as well.
Right. It's almost Happy New Year.
Right?
Merry Christmas.
Merry Christmas to you.
Yeah, happy holidays, Merry Christmas. It's that time of the year, end of 2023. So I guess let me start, because people are like, who the hell is he talking to right now?
Yeah.
Yeah, I'm talking to Ryan Purpero. Introduce yourself.
Hey guys, Ryan Purpero, U.S. Bank Home Mortgage. Been focusing in the Orange County market for about 20 years. Hyper focus on Irvine and the surrounding areas for about 15 years. Focus on purchase mortgages, and love doing what I do, and love serving the community. So thanks for having me on.
All right, it's my pleasure. So let's just get into it and let's have a conversation. Beginning of this year, interest rates kind of went boop, and everybody like freaked out. And
Yeah.
what did that look like for the lending industry?
Yeah, it's been running uphill for about 26 months. So
Okay.
it's a little defeating getting up every morning, seeing what they call like the 10-year Treasury, which is the leading indicator of where interest rates are going. It's a little defeating seeing it going up absolutely almost every day.
Okay.
But I think that truly the worst is behind us. We saw rates tip almost to the 8% space. Some would say over the 8% space, which is extremely high considering the past 15 years. So I think that we really wanted to get the inflation under control, and not that it's entirely tame, but we've seen some numbers soften, and I think that's been enough to give the Fed confidence to really maybe start halting things in terms of interest rates. And because of the halt of Fed funds rate, you're seeing the long-term rates, like a mortgage, like a 30-year loan, that's starting to soften up and come down. So we've seen things absolutely peak last month in November, and they've come down almost over a full point on certain programs. So that's a rather large swing.
Right.
So I'm hoping that that's the indication that the worst is over, and I think we'll have a very productive year.
Do you think the worst is over?
I absolutely do.
Okay,
Yeah.
interesting.
Yeah.
All right. I don't know. I think it is too. I think that next year is going to be a little. I think we're going to see a little bit of softening in the interest rates.
Yeah.
They're going to come down. I don't think they're going to come down a lot, but I think that they're going to come down. It's going to stimulate the economy a little bit more, so you can get some of those people off the fence that have been waiting. I don't think that it's going to affect our part of the industry in any way other than it's going to still drive prices up.
Yeah, I think prices will absolutely pop another 7 to 11% or specific markets.
It's scary how the number just keeps on going and keeps on going, but that part of it is what it is, and we do the best that we can with it. And we always preach home ownership.
Yeah.
Get in anywhere that you can, and make those monthly payments towards your investment. Continue to do it and be able to buy up and buy up and buy up. But you've got to start someplace.
You have to jump in,
right?
Especially from a tax perspective, and not that I can speak entirely on taxes because I'm not a licensed CPA, but just to try to get into some sort of wealth building, you have to have your foot in the real estate game.
Right.
That is the slow and steady, and if you look at the majority of the multimillionaires in this country, it's all real estate. You can talk about Bitcoin and some of this goofy stuff, but we're not in that space. And
so let me ask you this question. So in our industry, in the real estate industry, we saw about a 60,000, I believe is the number, 65,000 net fallout in the business over this past year. And the number was actually higher than that, but you also equate the number of people still coming into the business. So we've probably lost about 80 some odd thousand. We've had about 20.
Significant.
Yeah. In the lending world. Do you know those numbers?
So I have looked at some numbers more recently. I believe that we peaked out with like 150,000 unique licensed individuals in the country, and I think we are down to about 90,000. But that was 2 months ago. I expect even further fallout.
Down. Yeah.
But I know that nationally, I believe volume is down over 70%, and my business has fallen, in line with that as well.
Right.
So we are a debt-based society. We need money to be lent out to keep this thing going. So I think a 2-year run uphill in rates has been a rather long period of time. And I think I do think the worst is over. But I think it's an election year.
Right.
They're going to print some money. They're going to soften rates a little bit, try to keep people somewhat happy.
Right.
So I think that this could be the best time to jump in.
Okay.
Because you're going to get an opportunity to get a price today with appreciation tomorrow and a lower rate in 6 to 12 months. So I'd bet the farm on values going up at least 7-8%.
So, again, our industry, a lot of the fallout that we're seeing in the real estate world is just simple supply and demand. Too many agents, not enough pieces of the pie going around to everybody to be able to feed them. And in the lending world, I think that when you guys took that big hit when interest rates went up, there was a lot of people in the lending lending industry that were primarily focused on the refi and that refi business. I mean,
it's been stepped on and it's gone. Like I've always had a pretty purchase focused business. That's been my focus, but my ability to service my clients, past clients, and referrals to do the refinances. And I think I'm about 95% purchase this year, which is a couple refis by default. But if you were in that business of just focused on refinance, you've been entirely wiped out.
Right.
So it's not a good business when rates go up. You're out of business. So that's why we stick with our partners in real estate and focus on serving people getting into homes.
Okay. So you talked about the rates softening and that we're past the worst of it. Predictions for 2024? And I won't hold you to it.
Yeah.
I mean, your thoughts are?
I think that volume's going to pick up significantly from a mortgage perspective. I think you could probably see, almost a doubling by the end of the year. I think there's going to be a lot of refinance transactions from all these people that have purchased 7, 8, even the low to mid 6s.
There you go.
Getting something in the 5s, maybe. I think you'll see rates in the low 5s.
So you should see some of the people coming back into your industry then and trying to capitalize on some of that.
Yeah, unless they've been so damaged, spiritually, financially, physically, mentally by the hardship of the past 2 years. So there's like, I'm out of here.
Right.
But I think you'll see a couple guys and gals jump back in. But I think that the volume will go up from purchase perspective because people are holding on to 3%, and they're definitely not going to get rid of 3 to take an 8. But if maybe you can get them a 10-year arm and give them something in the 4s, they'll go, okay, we'll sell and move on to our up leg or empty nester, condo, something like this. But I see it as a really, I'm looking forward to it in a positive light entirely.
Sweet. Ryan, I appreciate it. Audience, I appreciate it. Thank you guys so much. If you like what you're hearing, even if you don't like what you're hearing, drop me a comment, drop Ryan a comment, subscribe, give us a little bit of love. I think we're working it here. We're trying.
Thank you, buddy. Thanks for having me on.
Yeah. Thank you, guys.
Thanks.